How do you get started investing? How do you put your money to work without getting sucked into all the hype and the scams? By the end of this video, you'll have a crash course on investing in the stock market and how to invest in stocks for 2019. In fact, I'm using the same investing strategy I developed as a professional equity analyst to reveal my 3 favorite stocks for the next year. We're talking stock market for beginners today on Let's Talk Money. Beat debt, make money, make your money work for you, creating the financial future you deserve. Let's Talk Money. Joseph Hogue with the Let's Talk Money channel here on YouTube. I want to send a special shout out to everyone in the community. Thank you for taking a part of your day to be here with us. If you're not part of that community yet, just click that little red subscribe button. It's free and you'll never miss an episode. Now for this video, I want to take a step back from our usual videos on investing and that analysis we do in individual investments. Instead, this one is going to be more basic, a stock market for beginners video. I'm going to give you everything you need to start investing in stocks, from how to get everything set up to how I research stocks for my own portfolio. I'm also going to reveal my favorite 2019 stock picks, so make sure you stick around to see where I'm putting my money this next year. Now, getting started investing isn't about taking $50 out of your savings and buying some shares of that next hot stock. Your investing plan is based on your life goals and your own personality around money. That's not something you can get in 30 minutes watching CNBC. But don't neglect this part of investing. I know it's not as sexy as picking stocks and talking double-digit returns, but give me 15 minutes and I'm going to show you how to make investing stress-free and how to beat your goals. We're going to start off with 2 questions every beginner investor needs to ask. 2 questions that are going to tell you a lot about yourself and how your personality is going to fit with your investments. Now, based off just these 2 questions, I'll show you 2 ways to get started investing in the stock market. I'll then give you a stress-free, simple 3-step process I use to pick stocks, something I developed over a decade as an equity analyst and when I worked with private wealth management. I'll then apply that 3-step process to the stock market and show you 3 stocks I think could produce the highest returns in 2019. But on to those 2 first questions, and these are going to seem a little vague and maybe even a little unnecessary for some people. You want to jump into picking stocks and getting to that process for stock market research, but don't neglect these basics. They're going to lay down that foundation that's going to show you how to be a better investor, a smarter investor, and protect you from all those bad investing decisions that destroy wealth. Our first question here is, are you comfortable with risk and losing money? Now, this might seem like an easy yes or no answer, but really think about it from past experience. What are some of those times when you lost money, maybe from gambling or from investing? This doesn't mean that you have to be okay with losing money to invest in stocks. That would be psychotic. The question is, how much stress do you feel with the idea of losing money or that risk in the stock market? Our second question is, what kind of investor do you think you might be? Do you want to be actively involved on a monthly basis in picking stocks, reading financial statements, or do you want a stress-free way to make your money work for you? I'll be honest, I enjoy reading the markets, learning about different investments, and taking that active part in my planning. Everyone's not like that. There are a lot of people that either don't have the time to devote to doing their own investing or just don't want to be a part of it. And there's nothing wrong with that. Nothing wrong with wanting a hands-off investing strategy. You do you, make your money and let the market do its thing, making your returns. Your answers to these 2 questions are going to determine whether you want to invest through an online broker or a Robo-Advisor. Now I'm going to go into each of these in a minute, showing you the difference between the 2, pros and cons of each, and how to get started before we get into that process I use to pick stocks. First though, I want to share a very important report I just finished, an inside look into something I learned over nearly a decade working for money managers and for the wealthy. That Wall Street lies to you. Wall Street found out decades ago that if it wanted to keep making money, good investment advice just wasn't going to cut it. Instead, it would have to become more like Las Vegas, entertaining investors and keeping them gambling. To do this, the entire investment industry has built itself around 10 lies it tells investors to keep them scared, to keep them glued to the news, and to keep them losing money. This is one of the reasons why I don't work for Wall Street banks anymore and why I can put this in a free report I'm giving to the Let's Talk Money community here on YouTube. I'll be sharing a link to get your free copy of that report, The 10 Lies Wall Street Tells Investors, towards the end of this video. But I want to get back to that idea of getting started investing and those 2 ways to invest, through an online investing site or a Robo-Advisor. Now, both of these are going to meet your financial goals. The only difference is how active you want to be as an investor. First, we have the online sites like Ally Invest, E-Trade, and TD Ameritrade. Now, these websites give you all the access you need to buy stocks, bonds, and anything else that's going to help you grow your money. You'll get all the stock research you need, financial calculators, and a lot of them are even going to provide some time with an advisor. Now, I like Ally Invest because it's not just an investing site, but part of a big financial company that includes banking and lending. That means you can have all your savings and investing in one place, plus mortgages and car loans at great rates. Now, it takes less than 5 minutes to set up an investing account. I'll leave a link to a review of the site and how to get started in the video description below. Now, on the other hand, if you answer those 2 investing questions and you find that you just don't want that investing stress, if you just want to have your money working for you, but you don't want to pick stocks or deal with that ups and downs of the stock market, then you'd be better off going with a Robo-Advisor. Robo-Advisors are just a computer doing what a financial advisor is going to charge you thousands to do. Robo-advisors like Wealthsimple and Betterment take your age and answers to an investor questionnaire and then customize your investing plan that meets your financial goals. Since it's all done by computer, the costs are a fraction of what you'd pay an advisor. Some sites like Wealthsimple even have advisors available to answer questions, so it's really the best of both worlds. I'll leave a link to Wealthsimple in the video description below if you want to learn more about that Robo-Advisor option. So you're set up with an online investing site like Ally Invest and ready to invest, but what stocks do you pick? How do you find those stocks that are going to outperform and beat your goals? Now I want to share the investing strategy I used while working for portfolio managers and private wealth funds. Understand that this isn't going to apply to you if you're going to put your money in that Robo-Advisor. Robo-Advisors are just going to put your money in a group of funds depending on your plan, and you won't be investing in individual stocks. This 3-step process is one that 80% of equity analysts use on Wall Street. It's a tested and proven way to find stocks that are going to outperform and a way to position your money to take advantage of those themes in the market. The reason why this investing strategy works so well is because it doesn't depend on picking individual stocks. Instead of trying to pick winners from the 2,800 stocks on the New York Stock Exchange, this process starts at a higher level with the sectors and industries that are going to outperform. It's called top-down investing, looking at those bigger picture ideas and those broader themes in the stock market before you try to pick stocks. You don't have to be an economist or a numbers nerd like me to do it. We'll go into finding those big picture themes, but what you're doing is narrowing your list of stocks to the sectors that are going to benefit. Instead of trying to find one stock out of 2,800 to invest, you're saying, okay, energy stocks have some great advantages in this market. What are the best 2 or 3 stocks out of those 100 companies? The best part about this strategy is that by finding these bigger themes, you don't even have to be right on the best stocks. Let's say you find that deregulation in energy demand and political risks are going to be really boosting the energy sector over the next few years. Now, I'm going to show you how to find the best of breed companies in that sector next. But honestly, with these big picture themes, you could throw a dart and hit a winner. By looking at these larger, powerful forces driving an entire sector, all the companies within that sector are going to be boosted higher. Picking a few of the best stocks is going to help squeeze out that extra return, but it's going to be hard to go wrong and impossible to lose money. So looking for these broad market themes, you want to look for a few clues. How do the different sectors react to higher prices? Are interest rates increasing, and how do sectors react to a stronger dollar? Are there international trade problems, and what percentage of sales comes from overseas customers for this sector? What are the demographics of customers for a sector? Are the customers better off or facing a weaker financial future? Finally, is technology changing the sector, or are there opportunities for change that might increase profits? Now, you don't always have to be watching for these big picture investing themes. Another advantage of this strategy is that these themes play out over several years, so all you have to do is find a theme or two and then ride it for as long as you can. Your stocks within those 1 or 2 sectors are going to benefit for years. Once you've got your broad themes and sectors, then you start looking in that sector to find those best of breed companies that really lead the way. This is where you narrow your list to 2 or 3 stocks that are going to outperform. The first place I go to do this is to compare the statement of cash flows. Now, this is by far the most important of the 3 financial statements because it shows you that cash generating power of the company. Management loves to manipulate the income statement to make earnings look higher, but it's much harder to change actual cash flows so you get that purer view of the company's performance. You don't have to be a professional analyst to look at these financial statements. Once you have a list of stocks within a sector from your bigger picture themes, there are a few things you want to compare on that cash flow statement. First is to compare the growth in cash flows from operations. This is how much cash generation from the business. So the best place to look and what you want to do is look at it over about 5 years. How much has cash flow increased over that longer period compared to other companies in the sector? Another place to look here is that free cash flow and the change over that same period. Free cash flow is that operational cash minus the spending the company did to keep the company going, so you get a feel for how much cash is actually available. On the cash flow statement, you can also look at how much the company is returning to investors through a dividend or buying back its own shares. You also want to look at whether it's paying back debt or borrowing more money. Comparing the cash flow statements of companies is going to help you narrow your list down even further. So you found a few sectors that are really going to benefit from those broader themes. That's step one. Then you find the companies within those sectors that are able to generate cash for investors at a faster pace and that are using cash responsibly. Finally, you're going to be looking for catalysts or roadblocks to growth for each company. This means looking in the financial news, reading analyst reports, and management presentations. By this time in the process, you're only looking at 4 to 6 companies in a sector, so that this level of deep research won't take more than a couple of hours. You've already got that big picture view of the sector. Now you're just looking for company-specific plans that play into that view. You're looking for companies that have a defined plan to take advantage of those big trends and how they're going to do it. Now I want to take these 3 steps and use them to highlight 3 stocks, why I think these are the best stocks for 2019. Understand that even if you're investing in these 3 stocks, they shouldn't be your entire portfolio. Use that stock market process above to find at least 6 or 7 other names in a few sectors. This is going to spread out your risk and limit that downside and maximize your returns. My first 2019 stock is Wells Fargo, ticker WFC. Now this was an easy one, despite all the bad press the bank has gotten over the last couple of years. Few sectors have as much going for them as financials, with deregulation and rising interest rates that are going to drive profitability. This is actually something we talked about in our Warren Buffett series because Buffett has more of his money in banks than any other place right now. Almost $40 billion of the Buffett portfolio is in financials. Wells Fargo is the largest deposit gatherer in the country and a leader in the mortgage market, meaning it's going to win big when those long-term rates head higher. Return on assets has slumped to 1.1 times this year from 1.4 times in 2013. That's going to leave room for stronger profitability on management's turnaround plan. Non-performing assets have shrunk for 4 consecutive quarters, and the bank has been able to grow deposits consistently. Now, I'll admit, it's going to take some time to rebuild the company's reputation after those scandals, but Wells Fargo has always had some of the highest marks for customer satisfaction among banks, and I think it can get there again. Our next stock for 2019 is CVS Health, ticker CVS. Now, the company has seen its shares gradually melt 45% lower since July of 2015 on that weakness in drug prices and fears around competition, but this is a company with a huge advantage and some great drivers. The Aetna merger is going to create a vertically integrated healthcare company like no other, able to control pricing and patients at every step in the process. Now, this idea started with a giant shift to an older population and growth in healthcare spending. Being able to control drug pricing and insurance could boost profits significantly, and the shares now trade for just 10.4 times trailing earnings. Even if Amazon is able to carve out a share with its acquisition of PillPack, the market is underestimating the healthcare market advantage controlled by the nation's largest drug retailer. My last 2019 stock pick, and I'm going to get so many comments for this, is General Electric, or ticker GE. For nearly a decade, we've been under easy money but no growth, so all companies have been doing is buying back shares. There's been no capital investment. Now that's slowly changing with tax reform, stronger growth, and a move to lower rates. So companies are going to be investing in new capital, and that's going to be benefiting these industrials and especially GE. Now I know GE has been a dog for the last couple of years. Shares are down more than 70% since 2016. But management has made the tough decisions, selling off some of their assets and spinning off others. Cash flow is protected, and I don't think the market is giving the company credit for it yet. I think a solid turnaround in the stock price could start in 2019 with even more gains over the next 5 years. So that's just a crash course on the stock market for beginners and some of the best stocks for 2019. We've got a lot of great videos on getting started investing here on the channel. Now I'm leaving a link to get your free report, those 10 lies Wall Street tells investors, in the video description below. Make sure you click through to get your free copy because it's really going to open your eyes on what Wall Street is doing and how you can invest your own rules. We're here every Monday, Wednesday, and Friday with the best videos on beating debt, making more money, and making your money work for you. If you've got a question about money, just scroll down and ask it in the comments, and we'll answer it in a future video.